Hi everyone. In this video I am going to explain about types of candlesticks. What is a candlesticks and different types of candlesticks and how can we use these candlesticks. So candlesticks plays a very important part when you trade. So there are actually 13, 14, there are n number of types of candlesticks, but I'm going to talk about the most important candlesticks which comes in daily use. We see these kind of candlesticks every day in almost all the stocks and index. So first I will be talking about the basic candle. The basic candle which represents the price. When the price is moving up, it will be represented with a green candle. When the price is going down, it will be represented with red candle. It is just when a positive thing is happening, then green candle. When a negative, the price is going in negative, then red candle. So what is this candles and what is this line, what is this, why this is green area, the naming. So what happens when when some share opening up here and then it goes here and then it comes down, it makes a low and then it goes again here and make a high over here. So it makes a high, but at the end of the time it closes here. Okay, so this part where the price has actually opened and closed, it opened up at here and closed here, this is known as body. And the prices which he had the candlesticks had traveled, but at the end of the time frame it closed after that. So this area is called as wick or shadow as well. Just shows that okay, the price has traveled there as well. It has not closed at 110, it had gone to 111 as well. Similarly it is with the red candle as well. Exactly the opposite. Price opened here, stock price opened up here, it went down till here, at this price made a low and it closed somewhere here, and before going it had made an high. So this part is known as body and this is a wick on both the sides. So I'll show you, I'll draw in front of you in the here and we'll see how does a candlesticks form. But before drawing this candlesticks, I'll tell you what is a candlestick. Those who don't know, so candlestick is basically, it denotes the price, denotes the movement of the price. The price movement can be denoted by either by candlesticks or by charts. So I'm going to tell you what happens when price moves. So I'm going to draw in front of you that what happens when candles move. Let's go for the first thing. We'll go with when the prices is moving in uptrend, as in the from 100 to 100 or 1 rupee. When it is moving, how does it move? So suppose that the movement of a stock started at this price at 660, it went up, then it goes down in the same time frame, but it covered till it comes till 659. Then again it starts going up and it goes up and makes go till here somewhere, and let's say here 665. Then at the end of, suppose that if it is a 1 minute time frame, after 1 minute it will close somewhere here. So now what happens to those it started here and I told it moved from here till okay, so I am not able to draw this in the between. So consider this, that it has been drawn in between of these candlesticks, and when the price moved from here, it went till here. So these prices have been covered as the wick, and where it started, it opened up at 660, it went till here and it closed here, okay, at somewhere 663. So this is the area which he had moved actually. Okay, though this is a wick and this is a shadow which says that the price has also went there, but due to the pressure of buying and selling, it could not survive and it came down. So same here, if I have to look here, let's see, this is a green candle which is a bullish candle. So the price had started at this point 661.45 and it went till here at 663.7, and there is a small wick. It covered that area, but before the time frame ended it closed below that. Okay, now let's talk about the bearish candle. So bullish candle means when the price moves upside, we say that candle is a bullish or bullish market. When the prices are going down, we say it has a bearish. That candle is a bearish. The red candle known as a bearish candle. Now we'll see what happens for a red candle. So for red candle, the price starts moving from here and it goes like this, and then it goes somewhere here, touch this point and again come back and covers till here but closes somewhere here. So this is the body. It opened up here, it went somewhere here as well, then again it started coming down and it touched 660 but it closed here. So the area which it had traveled will be denoted as wick. Perfect. So this is a bearish candle. And for bullish candle, so I'll show you first a bearish candle with wick. So here if you can see, the wick is on the both side, upside and downside as well. The price opened up at 662.75. It went up till 662.9, but again it went down and made a low at 661 and it closed at 661.5. So that's how that's how a red, which is a bearish candle, forms. And for the bullish candle, I'll just show you once again. That price moves from here and it closes like this. The area which it had traveled will be on the wick. So this is our, don't mind the size and the shape of these candlesticks, doesn't matter. What matters is here, what do you understand from this? So the price moved from here till here and made a high of here and the low was here. So the candlesticks are the backbone of all the charts. We can't trade based on the line chart. There is always a line chart. The prices are moving like this, then again it went, we'll see it like this. So it doesn't give us clear idea. That's the reason we use candlestick to know, okay, we can't tell here when the prices start, but in these candlesticks we can find out in different time frames when the price had opened up and went till what high it made and what prices it has closed, what low it had made. So candlesticks, if you are trading, always trade based on the candlesticks only. Don't go for any other trading style, any chart frame. So the next candle I am going to talk about is Doji. So Doji candle is like a addition letter, addition sign. So this is a Doji candle. So what happens in Doji candle, price opens up at this point and it closes also at this point. It does not have any body either of green color or red color. There is no body like this. Okay, see here, if you'll see this candlestick, the same, but there is a body over here of red candle. So we can't call this as a Doji candle. Okay, Doji candle will never have a body. It will not have any kind of red or green color body. It won't be like this. Okay, so it will be just an addition sign letter, that's it. And why does it form? So what happens in Doji? The price opens up at 667, it travels to 668, again it goes to 666 and closes at the same price. Because of that, it does not form any body. You know, when body is formed, when the prices are traveling from somewhere, okay, it goes anywhere, but the difference between the price opened and the price closed is the part of the body. So if you see here, the price opened up 662 and closed at 664. So till there only body will be formed. So basically when the body is formed, price closed minus price opened. So if you will subtract these for bullish candle, you will find the Doji. I hope you are getting the point. When the body is formed actually, and the shadow is formed when candlestick in the specific time frame travels somewhere from, let's say, 660 to 65, 66 to 67, but closes below that. So in order to show that candlestick has traveled or went till that point as well, that wick is formed. Now we are going to talk about the types of Doji candlesticks. First candlestick is a Dragonfly Doji. So Dragonfly Doji is basically a bullish candlestick. So what happens? It is just like a T letter. There can be small wick over here. There can be a small wick, but it is not necessary that it will look like exactly like a T letter only. There will be a wick at the upper side, but there will be long wick towards the downtrend. And when can you find these Dragonfly Doji? So these Doji are basically, Dragonfly Doji are basically found at the end of the preceding downtrend. Preceding downtrend when I am saying. So I'll show you exactly in the chart. Okay, so downtrend means the prices has started going down. Okay, so if you will see, the prices are going down from this point, it has went down. Okay, and after this candle it has started moving up, so which means this is a preceding downtrend. So when you can find these kind of Doji, so suppose that in this preceding downtrend, instead of this candle there is a Doji candle forming like this, and there is a long wick which is a rejection. Okay, so suppose that this is formed, and why this is formed? When there is the price is going down. Okay, so it means there is more selling pressure, there are more number of sellers in the market, but when the price reaches at this particular point, there is a support. Don't worry about this. What is support? So let's say support is that there are some people, some factor, some resistance which is not allowing the prices to go down. So it went till here, but there are buyers which force this price to go up, and it went till here. When can you trade in these kind of candlesticks? I'm going to talk about this now. So after this Doji, if there is a green candle after, let's say this is the Doji form, the next candle is green which is closing after this point, then you can buy right here and expect the prices till here as well, and depending upon the risk and profit you want to take. So this is known as Dragonfly Doji. Now we are going to talk about Gravestone Doji. So what is Gravestone Doji? The Gravestone Doji is exactly opposite of this Dragonfly Doji. It looks like an inverted T, and where you can find at the at the top of any of the preceding uptrend. Okay, which means that to find this candle, you can find actually anywhere this candlestick. It is not necessary that Dragonfly should be at the end of the, like you can find only before after preceding downtrend, uptrend, you can find anywhere. But to trade on these Dragonfly Doji or Gravestone Doji, these are the conditions. It should, before finding a Gravestone Doji, there should be a good uptrend movement. Okay, so let's say if we are finding any good uptrend movement, you'll see there is a good uptrend movement, but the price is gone. So you won't consider this. Yeah, so let's say here, if you can see, there is a good uptrend movement, right? The price has moved actually good till here, and after that this candle formed and the price started going down, right? So what would have happened if there was a Gravestone Doji formed? So let's say there is a Doji formed at this point of time. So after this preceding uptrend, there is one Doji formed, we'll assume, and okay, don't mind this, yeah, let's say this is a Gravestone Doji. And after this Gravestone Doji formed, if there is a candle which is closing below this level, then you can take the trade. Let's say this Doji is formed here and the candle has closed right here. You can take the trade at this point of time and you can make a good amount of profit. So that is the Gravestone Doji and Dragonfly Doji. That's how you can trade in using these two candlesticks. Actually, to be very frank and honest, it is very difficult to find these two kind of candlesticks. The most important candlesticks I'm going to talk about, which you'll find daily in your trading life, you'll find these kind of candlesticks in all the types of shares or stocks you'll be looking for. So these candlesticks are known as hammer candlesticks. People call it as pin bar candlesticks as well. Okay, so we are going to talk about now hammer candlesticks. So hammer candlesticks is basically says that there is a rejection towards uptrend or downtrend. Okay, so let's say I'm going to talk about the hammer candlesticks first. People name these hammer candlesticks as bullish pin bar as well. Don't get confused, both are the same candlesticks. How does it look like? You can just read out. It looks like a square lollipop and it shows a reversal movement kind of. Okay, so you can basically look for these candlesticks, hammer candlesticks. So when can you find first I'll explain you how these candlesticks are, how these hammer candlestick is formed. So what happens, the price started at this point and it went down like this, but it closed here. Okay, and assuming that previously there was a good downtrend, we are assuming there is a previously good downtrend and this formed a hammer candle. Okay, so this hammer candle, which is a bearish candle as well, can be of this body, can be of green color as well and red color. It doesn't matter at all the color over here. So what happened, the prices was coming down, it was coming down like this, and then suddenly the price is going down as well. Again it is going down, but at this point of time there is a strong support. The prices are not going down because of some buyers, some factors which is pushing this price to go up once again. So after this hammer candle, if the next candle is closing after this point, then you can take the entry and you can actually buy the stocks. So if it is forming like this, you can buy the stock right here, and you can expect the price to go till up here, or depending on the market condition as well, it will be going up. So I'll show you exactly where you can find in Bank Nifty, because in Bank Nifty on a daily basis we find these candlesticks, hammer candlesticks and inverted hammer candlesticks we find every day. For hammer candlestick, if you can see, there is a hammer candlestick. This is not a good hammer candlestick because the wick is not long, but still it is a hammer candlestick. So when can you find the candlestick has a good hammer? So when the wick size is double or triple of the body, then this is a good hammer candlestick. Okay, so if you see here, there is a preceding downtrend, right? There is a good downtrend, and after reaching this value it showed a rejection, and the next candlestick closed below this, closed above this. That means you can enter right here and expect some, depending on your risk and reward. It is not necessary that every time the stock will cover this price till this price where it had started. It is not necessary at all, though again here it had went till here. So suppose that if someone would have taken entry in Bank Nifty at 2196, it went till 22056, almost 110 points. So is it 110 points? No, it is more than that. It is 140 points it gave in just 42 and 18, 36 minutes. 140 points in Bank Nifty is too much. Okay, now the next candle I'm going to talk about is exactly the opposite of this candle, which is an shooting star candlesticks. People call it as inverted hammer stick candle as well. These candlesticks are basically shows that the movement towards downtrend. You can find these candlesticks before there is a good uptrend, and after these candlesticks the prices will start reversing to the downtrend. I'm going to show you in the market. So that's what, and same thing, the body color doesn't matter at all in these things. The same here, if you see, there is a good uptrend movement, and then again there is a inverted hammer candlesticks or bearish pin bar has formed, and the next candle has closed below this. So our entry is right here at 22010, and it went till here. You can see after this pin bar, which is a bearish pin bar, the market moved around more than 150 points. That's how hammer, you can say shooting star, or let's say pin bar candlesticks helps in the market, especially in Bank Nifty and Nifty 50. You'll see these kind of candlesticks every day in Bank Nifty and Nifty 50, and you can actually trade based on this pin bar candlesticks. It's the backbone, or you can say heart of all these candlesticks. It's the most important. Next I'm going to talk about is bullish engulfing pattern. So what is a bullish engulfing pattern? So engulfing means eating. Okay, so if you can see, there is a, let's say there is a movement preceding downtrend movement. Okay, you'll see prices are going down, 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 and at this point one big green candle happens, and which eats all these candles for this candle, this red candle. Okay, and after this green candle, the next candle which is forming is closing above this. Then you can take the entry right there, and you can achieve target based on the risk. Is if you're taking a risk of 1 rupee, you can expect the profit of 1 or 1.5 rupees depending on the market condition. So I'll show you this. So let's say here there is a good downtrend movement. I'll stop till here, and this is our red candle, and I'm going to take this as a bullish engulfing bar. Okay, I'll make this as a bullish engulfing bar in order to make you understand. So if you'll see, this candle has eaten all these, right, these red totally, and the next candle is green. Then you can expect the stock to move till here as well, till here, and it can go till here. Now this stock is not moving till here because we have just assumed that this is a bullish engulfing bar. So in short, I can say that bullish engulfing bar or pattern or candlestick is a candlestick which happens when it happens with a big green candle and eats the previous red candle completely. You can say this red candle is a kid and the big green candle is a father, and father is hiding this, the green candle is a father which is hiding this red candle completely behind him. Okay, right. So, and the next candle closing above this is a sign of that we can go and enter in that candle, and we can take a trade for a uptrend. Now this is a bearish engulfing pattern, which is exactly the opposite of the bullish candle, where if you can see here, there is a green candle. Yes, this is a kid and this is a father. Again, this big red candle is eating this green candle completely, and before this green candle there should be a good uptrend movement happening. Let's say these all are uptrend only, as all these are green one, red one. Let's assume this, and if this happens and there is one stock and there is the next time frame, this candle is closing below this, you can take the entry right here and expect stock going down. I will show you in the chart. Yes, right here. Now if you see, there is a downtrend movement, there is a small downtrend movement though, or let's see this, consider this only. There is a downtrend movement and there is a red candle forming and green candle as well. So let's say this green candle had eaten this I'll show you now in these charts now. So I told there should be a preceding uptrend, so let's consider this as an good uptrend movement, and it went till here. Let's consider this, and this is the candle which is formed, and now the next candle which will form is a big red candle and eating this. Okay, so let's suppose that the next candle which I am making is eating this candle, and the next candle is closing below this. Okay, so from here you can buy this, as in short sell this, and you can make the profit. So actually this is very difficult to find these kind of bearish engulfing pattern, but bearish or bullish, but you can find these pin bar, which is hammer candlesticks, in all the kind of shares, bank nifty, nifty 50. I'll just tell you in detail once again before this candlestick. So basically this wick, this this shadow is a rejection. When I'm saying the price doesn't want to go up, I'm talking about this, the price doesn't want to go up. No, it is saying that no, I don't want to go up, there is someone who is forcing me to go down now. Okay, so when this is forming, it is saying that now there is a reversal, now the prices will go down. So and if the next candle is forming red, then you have the confirmation that there is a chances of reversal, and you can take the trade. These things are already available on the YouTube, but telling you when you can trade by using this candlestick, when you can enter, I don't know whether it is available on YouTube or not, but yeah, you can trade based on candlestick as well. But if you're having any strategy, any indicators which you are reliable or which you have been using it, you can make your own strategy, or if you have any price action, you can take the trade on that basis as well. And remember, you can make good amount of money as well with based on these candlesticks, or just based on this hammer candlesticks as well. You can make a good amount of money from bank nifty, nifty 50. And if I have to analyze where there is an just entry or not, so I'll analyze first. There is no entry over here, there is small candlesticks forming, but this is not a good hammer candlesticks. If you'll see, this is not a good hammer candlesticks, and though the next candle will form showed a rejection as well, so we will not enter here. And the next candle, it could have been a bullish engulfing bar if this candle was till here, and the next moment went till so see here, there is a good amount of movement, as in the preceding movement there is a downtrend, though this is a small candle, and again there is this price is closing. You can't expect this price all the time to come down till here, till your foolishness. And this is small reversal. When the wick is a small, that means there will be small reversal. When the wick is long, just suppose that let's till here it is, then you can expect good movement, good reversal has it. Okay, that's how I showed you that. See, now this is a hammer candlestick, but this is the opening of the market. Okay, so you can't go ahead on that. So you'll find every day some candlesticks, some or one, not today, then maybe tomorrow, or maybe in any other stocks you can find, but definitely you can find. I hope you guys learned a lot, or learned something about candlesticks and make some good amount of profit using these candlesticks as well. See you in the next class or next video.